Hello, hello, hello. Hey, everyone. Welcome to the weekly home workshop. I'm Terry Taylor with the Tailored Realty team. Every Wednesday at 12:15, we spend about 15 minutes breaking down real estate topics for buyers, sellers, and homeowners. It's simple, practical, easy to understand. If you're joining us live, thanks for spending part of your lunch break with us. If you're catching the replay, we're glad you're here as well. Let's go ahead and jump into today's topic, what interest rates really mean for buyers. And interest rates is an interesting topic. We kind of talked about timing the market a little bit on last week, but for today, one of the opening thoughts we want to take a look at is, even a small change in your interest rates can have a big impact on your monthly payment. So small changes, increase in rates, can have a huge impact on your monthly payment. So with that in mind, again, the question becomes: why is everyone watching the rates? Why the buyers, sellers? What's the big deal with the rates? Let's understand the impact of the rates. Okay, number one, your monthly payments are going to change with the rates. When the rates are higher, it's going to impact your monthly payments. Your monthly payments are going to go up. Rates are low, your monthly payments generally go down. Your buying power is affected by the rates. Okay. A lot of times when we're consulting with buyers, we'll during that consultation, we'll tell you to budget and figure out how much of a mortgage payment you want. Generally speaking, we can back into a number using that. So let's say your comfort level is like, just let's say $1,500, $1,700 is your high point. Depending on what the interest rate is, kind of dictates what the buying power is for 1,500. So with a higher interest rate, 1,500 definitely will not buy as much as it will on a lower interest rate. You also want to look at long-term affordability. That's another reason folks watch the rates and what the rates are doing. And then obviously the market impact. Now, for a while, we're going to continue to use COVID as a jump off point, because COVID set a lot of precedents and it gave a clear picture on some of the topics that we're discussing. When those COVID rates dropped to 2 and 3%, remember, it flooded the market with buyers. So there were a lot of buyers in the market. So it had a huge market impact. Homes were flying off the shelves, right? Prices were going through the roof. So that's one of the things you want to understand when you're talking about interest rates. But remember now, the key is interest rates don't change the price of the home. They change the cost of borrowing the money to purchase the home. And just think about it. If I can borrow $300,000, $400,000 at a low interest rate and it matches my payment, that increases my buying power. So uh, your superpower is your interest rate. And that's why I know, even as parents, as people give you advice, your mentors, those that are talking to you about interest rates and keeping your credit good, this is one of those reasons. Um, if you're a credit risk or you overextended yourself, your debt to income ratio is high, you got more debt than you got income. Those kind of things will affect, what kind of interest rate you'll get, and it'll affect what a mortgage professional can do for you, whether it's your banker or it's a mortgage company. So we've kind of talked about it already, but let's talk a little bit more about how rates affect buying. Remember, higher rates increase payments. Okay, lower rates increase affordability, and buyers qualify differently based on rates. So higher rates increase payment, lower rates increase affordability. So the amount of home you can afford. And as a real estate agent, that's one of the things that we see on a regular basis. Um, Buyers come in with a mindset of what type of home they want, and sometimes they don't realize that's going to be impacted by what kind of credit score you got or what kind of rate you can get. And when, again, COVID is going to be our hallmark for a little while. When rates were at 2 and 3%, which is super low, buying power was very high. Also, if you didn't realize it, there are a lot of good tools out there that help you understand this better. They're called mortgage calculators. You can go to taylorrealtyhomes.com, go into that buyer section, and there's a finance section. If you go there, you can use our mortgage calculator absolutely free, but it'll give you a better understanding of your down payment, and how all of these things play into your actual mortgage payment. But you can play with the interest rates and see what interest rates do to your buying power, as well as what it does to your monthly mortgage payment. So those tools are good. And again, it's good to have a good idea, or it's good to have an idea of what kind of things you're going into when you start the home buying process. I think we kind of talked about it on last week. One of the biggest misunderstandings and one of the biggest mistakes buyers do is trying to wait for the lower rates. What's the harm in trying to wait for a lower rate? Well, as we discussed, when the rates get super low, it increases the competition. You, as the buyer, now have to compete with a lot more buyers when the interest rates get really low. And so, the other thing you come up with is trying to time the market. That is, I believe that's probably one of the biggest misconceptions, is that you try to time the market, and in so doing, you miss out on getting some of the things that you could have gotten, if you would have, pulled the trigger when you were ready or at that particular point in time. So waiting for rates to get lower, just it's really not a good idea. Um, Remember though, low rates can definitely save you money, but they can also increase the competition. So you're going to have a lot of competition when you're out there, with lower rates. Again, COVID is my go-to example. I've said it before. I'll continue to say it. Give you a quick story. During COVID, we had buyers that would want to go see properties. We'd go see them. There were lines of cars at those particular properties. Remember, interest rates were at like 2 to 3%. We would call the listing agent and say, "Hey, look, we've got a buyer that's interested." And and this is no exaggeration. This I'm really not exaggerating at all. Sometimes they would tell us, "Look, we've got 20, 30." One time we even heard, "We've got 50 offers in hand right now." 50 offers, which means your offer has to stand out among those 50. So there were all kind of creative things that buyers were doing to try to get that, up to and including paying more for the house than it was worth. So that's an extreme example, but it still helps to illustrate the point. When those rates get lower, it increases the competition. So then the question becomes, well, what should buyers focus on? Number one is, what's your monthly payment comfort? What level of payment are you comfortable with? Regardless of what rates are doing, regardless of how much house you want to buy, what's your comfort level for the payments that you want? Okay. Now, another thing you want to consider, things that a buyer should focus on, what are your long term goals? And quite honestly, that's why you want to work with a professional, because professionals help you stay on task with your goals. Professionals will give you a consultation. And again, we'll find out what your wants, your likes, your dislikes, your must haves, your nice to haves, and we'll make sure you stay on task. What's your financial stability? Did you just start working at your job, or have you been there 10, 15, 20 years? Do you have savings set aside? Do you have an emergency fund or a nest egg? So, what's your financial stability like? And the other piece is, don't forget about refinancing opportunities. Now, being in the business, you hear a lot of cute sayings, but I heard one that made a whole lot of sense. And it's something that mortgage lenders tell their clients all the time. You marry the house, you date the rate. And what that's basically telling you is, hey, if now's the time, if you've done your homework, if you're ready to make that move and you find the house that you want, you're only dating the rate, because refinancing opportunities will present themselves, or can present themselves possibly, if and when rates go lower. But if rates continue to climb and you're trying to time the market, then you just missed out on a home that you could have purchased because you were ready. So again, that's the danger in trying to time the market and wait for rates to do something different. So, just a few quick takeaways. Remember, this is just a 15-minute segment. We're not here to keep you all day. Just wanted to give you something to think about on your lunch break. Rates affect affordability. Lower rates doesn't always mean it's going to be easier for you to buy. Remember, lower rates sometimes or oftentimes means more competition. And finally, you want to focus on your long term comfort with the payments, comfort with the home that you're in, just making sure you're financially stable, comfort with the job that you're in. Make sure now is the right time because, again, the timing and the needs of these things, they're going to vary from person to person. Everybody's situation is different, and you have to buy when it's right for you to buy. Certainly, that's what Taylor Realty is here for. We're here to help you make these moves, transition into purchasing your first home or downsizing or whatever it is you're looking to do with real estate. We're here to help you. And again, we're your financial professionals, your real estate professionals, excuse me, that can help you navigate through this financial landmine as far as rates and buying power and things of that nature. So we're here to help. Schedule your consultation. Go to our website. Got a lot of resources there, up to and including, like I mentioned earlier, the mortgage calculator, where you can kind of find out where your payments look. And what are the things that you consider? What are the things that you're thinking about if and when it's time for you to buy your home? Are these things that come to mind? Interest rates, buying power, competition, how much house can I afford? Really, you want to start budgeting and thinking about those things now. Did you know about marry the house, date the rate? Think about it. You could refinance. So uh, don't find yourselves trying to time the market or catch the market at the right time. If you do when you do it, then that's fine. And maybe you catch it at a low point and it starts rising, and you can pat yourself on the back and give yourself an attaboy that you caught it at the right time. But even if you didn't, look at your situation, consult with a professional, get the advice that you need, because one of the things we used to tell our buyers all the time, what you don't know can cost you a lot of money. And so that's what we're here to do. We're here to help you think about all of these situations and scenarios so you can make wise and intelligent decisions about home buying. Remember, go to our website, click on that link, book a consultation. We'll be happy to talk with you and walk you through the numbers so you can see exactly what the interest rates are doing right now. If this was helpful, don't keep it to yourself. Share it with someone who could use it. Remember, we're not splitting the atom. These aren't super complex topics. Yes, I may have said something that you've already heard or that you're aware of. But remember, everyone is not where we are. We want to help people along the way. Anytime we help somebody to reach these financial goals and do these things, remember, it stimulates the economy. It's good for our community. So it's not good for you to sit on information if you got it. So share this with somebody else. And remember, don't make a move without us. We'll see you next Wednesday at 12:15 for the weekly home workshop. Thanks for joining us. Enjoy the rest of your lunch break. Take care. Have a good one.